Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Dick shares his winding path from George Washington University to investment banking. We learn why he took a few years off in the middle of college, why it took him another 3 years after graduation to get into investment banking, and why he recently made the jump to leave a lucrative vice president position to jump into the world of Hollywood. Enjoy. All right, Dick, thanks so much for joining the Wall Street Oasis podcast.
Yeah. Thanks for having me on. It's awesome.
So it'd be great if you could just give the listeners a short summary of your bio to get started.
Yeah, short is a tall order.
As short as you can make it.
Yeah. Well, it's funny. So I've been reading WSO for 10 years now, probably actually a little bit more. I started an undergrad, graduated in 2010 from George Washington University, which at that time, and I still think is pretty much not really a target school. I figured out I wanted to do banking late in the game, like junior year, because that's when I took actual banking classes. And so I didn't have like the traditional like banking internship, and it wasn't a target school. So I leaned really heavily on resources like WSO to basically come up to speed on the subject. And I found the site incredibly helpful, and even throughout my banking career. So anyway, I actually left. I graduated in 2010. I worked in wealth management for a year at Morgan Stanley, and then I jumped to consulting because I knew that I needed something that was more analytical to appeal to investment banks. But I still had my licenses from my wealth management gig. So I had my 7 and 63, which was actually really helpful because after a year in consulting, I moved into banking at a small boutique firm. I was in DC where George Washington is. And that was actually very helpful for them, and I think helped me as a candidate because they knew that I already had my licenses. So I wasn't going to need to, take the risk of not passing and then not being useful for them.
Yeah.
So I worked for them for a year. It was a small, basically equity capital market focused firm. And after about a year there, I had an opportunity through a headhunter to lateral into a large international bank headquartered in New York. So I'd left DC to go to do banking at the smaller firm, and then when I was in New York, I had the opportunity to interview at the larger place. That was like a full service investment bank with all products and capabilities. And I was there for 7 years until September of 2021, when I was in New York and the pandemic hit, and it just turned into a complete gong show. And so at that point, I was basically I left. I was living remotely in Florida for like 7 months and loved it.
Where in Florida?
St. Petersburg.
Okay, cool.
On the West Coast.
Yeah, St. Pete. Yep.
God's country. And so I had a taste of the promised land, and I liked it a lot. Came back to New York because the place I was living at got sold. And I wanted to stay in Florida because I just couldn't deal with the chaos and confusion of New York. And I proposed it to my boss after bonuses to basically continue working remotely from Florida. like I've been doing for the last 8 months. And I was basically, that wasn't going to work because of compliance reasons and supervision and stuff like that. So I said, you know what? This whole time for the last 3 years, I'd also been doing stand-up comedy in New York and Florida. And I got a manager, like a talent manager, right when the pandemic set in. So I've been auditioning for movies and TV for like a year on the side, and doing stand up and doing my banking gig. So it was a busy
Insane.
couple of years. Yeah. And at that point, I was like, you know what? I have an opportunity to go at this full throttle. I have the banking skills that I'm never going to lose, but it's really a unique time to take a shot at acting and comedy. I always wanted to be an actor, and I actually had booked a movie right before, like maybe 2 months before I was talking about leaving in June. And I was supposed to film in the fall of 2021, so it almost worked out perfect. It ended up getting delayed because of COVID. So I said, you know what, I'm gonna just ride off into the sunset, and that was in September, and the rest is history.
Awesome. So let's go back. So a lot to unpack there. Let's go all the way back to undergrad though first, or like, where did you grow up around? Like
Connecticut.
Connecticut. Okay. So any specific reason, George Washington U?
I actually liked politics, and I thought I was going to be like a poli sci major.
Yep.
And then I took a poli sci class, and it was not fun. It was like really boring. It was about like, how legislation gets passed, which is fine and good to know, but wasn't what I wanted to spend, the rest of my life doing. But it was in DC, and so I actually left after my freshman year. I did volunteer work for like 3 years for my church. Then I came back.
Where was that? Where was the volunteer work?
In New York.
Okay. What did you do?
I was close to home. I was doing like promotion and public outreach and stuff like that.
So you left college for a year or for 3 years?
Yeah, for like 2.5.
2.5. Okay. Yeah.
And then I came back, and when I came back, it was like the financial crisis.
Yeah.
So
yeah,
I was looking at what was going on in the financial world, and I didn't know anything about finance. No one in my family knew anything about finance.
Yeah.
I knew people whose families worked in finance, but I personally didn't know anything about finance or money management.
Yeah.
And so I was like fascinated by it because it was in the headlines constantly. During 2008, it was like COVID today.
Yeah.
So I was like, and I wanted to make money. So I was like, you know what, this seems like a really interesting opportunity. And I had also, while I was volunteering, I worked in like real estate appraisals to make money.
Yeah. So yeah, tell me the volunteer thing. Can you just tell me, like, you start a year, why leave after your freshman year? You just felt like, this isn't for me. I'm not ready.
I didn't really know what I wanted to do.
Right. Okay. It was a searching phase for you.
Yeah. And I was like,
you were 19.
Yeah. I was like spending all this money, to go to school.
Yeah.
And it just seemed like a waste because I was there to do politics, and I was like, I don't really like politics. I don't know what I really want to study.
Right.
So I really needed to just experience in the world. And so I got it.
I think it's really interesting because I don't hear a lot of guests say, okay, I stopped in the middle of undergrad. Like almost none of the people that have come on here would ever be like, hey, I'm going to stop undergrad. Cause it's like, they have this, focused mentality. So it's interesting that you felt like the confidence to do that. It's kind of similar to kind of the jump you made recently, but
yeah, I was going to say they probably wouldn't left banking either.
Yeah, exactly. So yeah, tell me a little bit about just like the mentality around like, okay, I don't know what I want, so I'm just going to stop and I'm going to go, hey, I'm just going to go live at home and get a couple of side jobs. Like I'm just going to try to get some work experience. Tell me about that thought process.
No, I lived in New York. I lived at home for a couple months, and then I moved to New York and had some roommates.
It's like, how are you paying rent in New York?
So I was working I was working in real estate appraisal for a little while on the side, and then I was working, and then I was living with my girlfriend's family, so I didn't have to pay rent.
Mm-hmm.
But I just figured it out. I just found ways to basically, pay whatever I needed to pay. And it was interesting because I was working in an appraisal firm when like the real estate market was collapsing.
Yeah.
In front of so I had like basically a ringside seat to what was going on.
Mm-hmm.
And it was eye-opening. And like I said, I didn't know anything about what was happening. All I did was read, news articles and see what was going on at work.
This is like 2009-ish around time frame.
2008.
9.
Yeah. 2007 to 2008.
Okay.
And then, so then I went back. I was in school fall of 2008 when like Lehman Brothers was crashing. I was taking, economics classes basically. And it was like, I was learning from people because I was in DC. I was learning from people who were like on the board of the Fed and worked with Tim Geithner.
Yeah.
So I had this amazing proximity to.
Yeah. What was going on?
Yeah. Like my intermediate economics professor was Tim Geithner's good friend.
It's amazing. Like quantitative ease, front row seat to quantitative ease and QE.
Yeah. Yeah. It was fascinating. And I was like completely captivated. Like cool. I ate it up. I was, because I could apply it. I could like take what I was learning and apply it exactly to what was going on. I still didn't really know what I wanted to do in finance. I didn't know what you could do.
Right.
I just wanted to understand what was going on, basically. And also I wanted to learn like how to manage money because I didn't know anything about managing money. Nobody in my family did. And, it's an important subject. They don't really teach it to you in school.
What do your parents do, if you don't mind me asking?
My dad's in advertising. My mom is an artist.
Yeah. So there you go.
So yeah.
Yeah.
And no one in prior generations knew anything about money.
Yeah.
So it was basically a situation where like, I was like, sort of a baptism by fire kind of thing. I was reading in the headlines what was going on in the economy, and then I would like go take a macro econ class.
Yeah, it's cool.
About QE.
Yeah. So that was I guess your sophomore year, but you didn't really learn about banking, or you were late to the game by junior year, you said.
Yeah, exactly.
You were like, oh wait, this investment banking thing sounds interesting. My guess is you probably had stumbled around WSO around that point, and we're like, oh.
I found out about WSO.
Was it too late? After?
Like junior year.
Yeah.
Like second semester junior year.
And so then did you try to like get interviews and just couldn't?
Yeah.
You couldn't do it?
I did. And I got, it was funny. I took an intermediate finance class over the summer of
sophomore year,
between my junior and senior year.
Okay.
And that was like, it was called intermediate finance, but really was like investment banking case studies.
Yeah.
So I learned about like, recaps, and I learned about LBOs and takeovers and M&A transactions. We actually would look at, like we did case studies on like First Data buyout, by KKR, and levered recap that like Series did, which was the parent company of an outdoor furnishing chain, basically. And I didn't know it was investment banking even at that point. I just knew like, oh, this is really interesting because it tied together all the elements that I've been learning about, corporate finance, capital markets, microeconomics. And it was fascinating. And so that was like my favorite class. I was like, okay, that's what I want to do. And that was investment banking. But that was, like the summer of my junior year, right? So during the time when I would have been interning, basically, when I was learning about this stuff, which was too late to get an internship, obviously.
So what did you do coming into senior year?
I just basically, I was I think I joined the finance club like senior year or something like that, or like, so I was basically like.
Did you drop your resume though? Did you know how to network or do any of that stuff, or did you just?
Not really. We were lucky. We had someone who was a former Lehman Brothers VP. He was at Citi, I think, one of the two. He'd gotten laid off in the crisis, and this was still like 2009.
Yeah.
So there wasn't a lot of hiring going on to begin with because Wall Street was still like recovery.
Survival mode. Yeah. Okay.
Yeah, exactly. But I did have an internship actually at an asset management firm my junior summer going into senior year, but it wasn't banking.
Yeah.
So I had the prior summer I had interned at a consulting firm, economic consulting, and I was working on antitrust cases for the Intel merger or the Intel acquisition of McAfee.
Oh, cool.
So I had like relevant experience, and I had done actually basically M&A modeling and for my asset management firm, interestingly enough. So this all kind of came together without really my knowing it. So I basically had enough to be like a credible candidate for banking, even though I hadn't done a banking internship.
Yeah.
And if it had been a better recruiting year, who knows? If it had been now, I probably would have gotten a job.
Yeah. Yeah. So did you end up getting any interviews or applying, or was just?
I did. I got like 2 interviews at Stifel and then TD Bank. Mm-hmm. Stifel, I didn't get it because I got a question wrong on like how you would allocate your portfolio, like your investment portfolio in a recession. And I was like, yeah, I'd buy like bank stocks or something. And they were like, you think banks would do well in a recession? I was like, maybe. And then TD, I didn't get it because I didn't really understand what like wholesale banking was. And I didn't really even understand entirely what like investment banking was.
Yeah.
So I was in like a super day.
Yeah.
At the office, and they kept like I kept going back and forth. I was like literally learning in this interview what wholesale banking was because I didn't know.
Yeah.
And people coming into those situations are a lot more polished. So anyway, I didn't get out of those jobs.
You don't get it, but then how do you end up with the was it the Morgan Stanley job, right?
It was Morgan Stanley, and I got that through our job board at GW.
GW like were those interviews easier for like the wealth management?
Yeah, it was much easier. Like I was, you didn't need to do 4 years of finance to land that job. Most people didn't. But it was in the industry. I knew I could get my licenses, and it was relevant, and I could learn something from it, which I did because I worked with guys that had been stockbrokers for 30 years. So
do you think that if people can't get into banking or they're late like you, do you feel like wealth management is a good kind of step for them? Based looking back? I
don't know if, it sort of depends. Like, obviously, if I can do it, anyone can do it. And I think actually that's the power of WSO is, you can learn from people like me. Like I would read, all kinds of backgrounds.
Yeah.
People. And like my background was like one of the least likely. Like if you read my resume on paper, you'd be like, this guy would never have a shot at, front office banking.
Yeah. Well, it's interesting because there's a lot of kids in your situation, even more nowadays, that are, in quotes late because recruiting's early. It's like it's sophomore year now.
Yeah, it's crazy. Yeah, I know.
So, there's a lot of juniors and seniors who are really sharp kids who are just, they're left out because they didn't know freshman year that like investment banking are calling. And so, what I always say is like, oh, it's okay because, eventually you can make it there. Wealth management is one angle. Would you agree that like valuation or like a transaction advisory services at like a Big Four would be good?
Totally. I know people who've gone in from valuation. I know people who've gone in from transaction advisory services. I know people who've gone from accounting, from audit, from consulting. Obviously, is like a tried and true path.
Yeah, ideally something related. Yeah.
Yeah, if you have like if you really want to do it and you have the willingness to learn what it takes and you're willing to work at it. Like, I took weekend seminars on financial modeling. I, networked aggressively with people from my school, with people outside of my school, with, contacts that I knew from family and
But
friends.
were you doing that after you were already at Morgan Stanley? Kind of once
Yeah,
you knew more at that point.
yeah,
You had your series exams. You're like, oh, okay, here's where I am. Here's where I want to go. And so
yeah.
tell me about that. So tell me a little bit about like, okay, you're doing some boot camps on the weekends for financial modeling. You're starting to develop your skills, make your resume look a little bit more financy or banking
Yeah.
heavy. But then you end up transitioning after a year from Morgan Stanley to more of like a consulting role. So why?
Yeah,
Why
exactly.
not
Because
hold out?
I knew I needed to do something.
You just needed to jump.
I needed to do something more analytical. Because wealth management really wasn't. I wasn't doing anything that was like similar to investment banking. I wasn't doing anything. I wasn't doing really much in Excel. I wasn't doing that much analysis really. Like I wasn't even like picking stocks. I was like basically like helping people like manage their wealth management account or whatever.
Right.
Um, so so I needed some, and I had the skills because I'd studied. I'd done these classes and I'd done boot camps and stuff like that. So I was like, I knew I could do it. I liked Excel a lot. Um,
Yeah.
I really enjoyed the financial modeling stuff that I did. And interestingly enough, the coach of the boot camp that I did, this like 2-day weekend boot camp, ended up recommending me to one of his clients because he was similar to probably I'm sure your clients at WSO for your trainings. He was like, "Hey, this guy's really good. I know you're looking for people. You should talk to him." And that's how I got my banking job, actually.
That's
But
amazing.
sorry, go ahead.
That's amazing. So he like saw you were like a wizard in Excel, like not touching your mouse.
Yeah, and I was asking tons of questions. He could tell I was really fired up, and I loved what I was learning about, and I did. I loved corporate finance. I was like totally gung ho because I was like, okay, this is how you run a business. This is how you manage a company. This is how you read a company. Like I didn't know. The biggest thing I wanted to learn coming into school was like, how do you even know what a company's finances mean? I'd heard all these terms, financial statements, income statements, balance sheets. Like, what does that all mean?
Yeah.
And I was like, it was so cool because you could actually learn it. You could know what it was, and you could have like definitive answers. And I liked that.
So you ended up getting your job out of a instructor from a boot camp.
Yeah.
So he comes up to you and says, "Hey, I know these guys at this boutique bank."
I just kept in touch with him afterwards, and we hung out, when he was in town, and we like,
Yep.
and he's a great guy. His name's Neil Kumar. He's awesome. Shout out if he watches this. But he's just one of these really genuinely great people.
Yeah.
And I talked to him like 3 weeks ago. We're still in touch. He's a great guy. He's an entrepreneur. He's like a total go-getter. And it's what I've learned later on in my career, and this applies to early in the career, I just didn't know it at the time, was the people, business is done through people. It's not done through machines. It's not done through computers, and it's not done through phones. It's done through people. It's done through people that you create relationships with in any business.
Mm-hmm.
Now, I didn't know it at the time, but what I was doing was selling myself. And he just saw how eager I was and how determined I was to do this job. And so he helped me, but I had to do a lot of other steps. Before I had to make myself credible. I had to basically create a candidacy from nothing.
Yeah.
I was lucky that I had a finance background in college because that's, that helps. It helps you learn all these concepts because you have to do them on your own. It's much harder. And there are people who, of course, do that. And they're just brilliant, and they just figure it out. But I was lucky that I had that background and that really helped. So anyway, then I went into consulting and I was consulting for basically banks, regional banks. The company was in DC. So we'd consult all these banks all over the country, and I would travel to them and I would help them create banking products. I would help them with M&A analysis. I'd help them with integration. And it was really good. And the firm that I ended up basically lateraling to for banking had a really strong FIG practice.
Got it.
And so I was great for them because I had my licenses and I had experience in banking and I'd done M&A work. And so like perfect, because FIG, as you know, is very, very like
it's niche.
Yeah, exactly. It's what you would call like, God, what is the term for it?
Specialized or
Abstract. Yeah, specialized. Exactly.
and to explain to listeners that don't know financial institutions group, financial institutions, their financials are very different from a normal firm. So, your revenue is, not typical revenues. Oftentimes is your interest and your all the stuff. The ways banks and financial institutions make money is very different from a typical, widget maker.
Yeah.
So,
No EBITDA.
No EBITDA. Yeah. So in terms of the skills you learned that's really interesting. So you were able to kind of do the consultancy for almost a year and a half, travel around, make a good impression. I assume that there was a pay jump from wealth management at Morgan Stanley to that consultancy, or was it still relative like 60? I'm guessing like 60-ish base, 50-ish base.
Are you talking about like the salary?
Yeah, like wealth management wealth
It
management.
was a little higher, not that much.
Yeah. Okay.
60 or 70, I think, at that time.
Yeah.
Who knows what it is now? Everything's so.
And then the jump to banking, was it a big pay raise, at least on the bonus side?
No, it wasn't. This bank paid terribly. They actually lost tons of analysts. My entire analyst class quit within a year.
Oh my gosh. Okay, so they were paying. It wasn't a pay jump at all. It was like flat.
No. It was like a lateral. It was a lateral move in every sense. They then raised the pay the year that I left because everyone quit.
Everyone was leaving. Okay.
Yeah.
But you were there. You were doing mostly FIG work, but I see here you're doing some M&A and capital raising.
I was doing mostly FIG, but I also did. So I moved to New York. Yep. I knew that was important because I knew that that's where the majority of
the land of opportunity
the firms were. Yeah. So if I wanted to be in finance, I had to be in New York. Yeah. I knew that. So that was great. And the FIG practice was a lot in New York. And so I moved there. I was doing mostly FIG, but also real estate and energy, interestingly enough. And I learned the real estate thing came in handy later on because now I invest mostly, or actually I invest entirely in real estate. So that helped a ton. The energy stuff was useful because I could figure out what was going on in like 2015.
Yeah.
When oil fell out of bed. And then the FIG stuff was useful because later on I moved into financial sponsors at the next firm.
Yeah.
Which everyone confuses with FIG.
Yeah.
And still recruiters hit me up to do FIG 8 years later.
That's hilarious. Really? They don't know financial sponsors is different?
No, they don't. They have no idea. It's so funny.
For listeners, financial sponsors, it's more like the LevFin group, right?
It's private equity, basically. Private equity, family offices, hedge funds, but anyone that does leverage buyouts, because what you're doing is essentially 90% of your job is arranging debt for LBOs. And the other 10% is like recapitalizations for leveraged companies, add-on acquisitions, exits, things like that.
Got it.
So, but you're working with private equity companies essentially like 24 hours a day.
Yep.
I mean that literally. So anyway, that was really helpful because when I was there.
Let's back up. So you're at this boutique, not paying you a lot. And was that what kind of pushed you to kind of look for a lateral move to a bigger bank?
It wasn't really the money. It was mostly the experience. I didn't really want to do FIG forever.
Yeah.
Or energy or real estate because they were so so abstract.
Yeah.
They're
special. They're specialized. Like you could be.
They're all very specialized.
You can be like a specialist in energy or in real estate or in FIG. Yeah. It's weird to be like doing all three.
Yeah, exactly. And also, they didn't really deal directly with like anybody's lives. Like I wanted to do something that was like a little more tangible, a little more like relatable for like everyday life. Sponsors ended up being great because I was in like a product and coverage group at the same time.
Oh, cool.
So I was basically like working, I was doing leverage buyouts in like every possible sector of the economy and industry. And so I got exposure to everything, real estate, gaming, consumer, healthcare, FIG even, building products, industrials, chemicals. I mean, you name it. You learn a lot about all these different things. So anyway, so the FIG thing actually came in handy because everyone is like, FIG is so much harder than all the other banking practices that, like, if you can do FIG, people assume you can do anything, and you pretty much can.
Yeah.
And I had done all this modeling and coursework in college, so I knew that I could do that, and I knew how to like model a regular EBITDA company.
So you went from like wealth management, an associate to whatever, an analyst, consulting analyst to a investment banking analyst. You're already 3 years out of college.
Yeah.
And you took the 3 years off in the middle.
Right. Yeah.
So how old are you at this point as an analyst? You're 20, you were 20.
I think I was 25.
Oh, okay. You weren't that old
when I came in.
Okay.
Yeah, because I did college in 3 years.
You did college in 3 years. So okay. That's why it saved you a year. So
yeah,
you kind of lateral again as an analyst to this larger bank. You finally get the big pay raise.
For me, it was big pay raise. Yeah.
You include with the bonus.
For most people, it was street. For me, it was like.
So you're kind of starting there, and they're starting off as like a first year analyst again.
Yeah. So I took a year back.
Yep.
So I ended up doing 4 years as an analyst.
It's a lot.
On top of the consulting thing that I did, which I was an analyst. So I was like an analyst for 5 years.
Tell me about that. Like, do you feel like
it was hardcore?
Because you're always.
I will tell you that
you're just getting shit on like nonstop. Like you're always.
Yeah, I was so used to it at that point that it was like it just didn't even matter. And honestly, I loved what I was doing.
Yeah. Well, that's huge.
Especially in sponsors. Sponsors, I just loved. I was like in heaven because I was doing LBOs. I really liked LBOs. I wanted to do it because when I was in college, I was learning about
the KKR buyout and
and I was reading every book I could get my hands on. I read House of Morgan. I read Liar's Poker, of course. I read Barbarians at the Gate. I read Predator's Ball. I read When Genius Failed. I read The Big Short. And I was like, this is the way you transform American industry, which is what they did in the 80s to a large extent.
Yeah.
I would later learn that that's really not how it works today. But I had this sort of idealistic dream that, like, okay, these are enterprising, basically investors that can reshape ossified companies and therefore industries. They could shake up these like.
And you don't believe that? You don't believe that today?
I don't think that's the primary motive today. I'm not sure it was the primary motive then. I mean, the primary motive has always been to make money.
Right. But you meant like back then they were really moving industry. Like it was dramatic.
Because nothing like that had existed. It wasn't institutionalized at that point. Right. It was a very novel concept. No one knew really what an LBO was, and the people who were doing them weren't like these veterans of private equity. They were like basically investment bankers and industry professionals.
Funny thing is, people have been doing LBOs, real estate investors,
since the 60s.
Yeah, like for a long time. I mean, that's what the mortgage and the flipping and the it's you just keep rolling your capital and you get as much from the bank.
But it wasn't that like when like Kravis and Schwartzman and Forsman Little and all these guys were doing it. It still wasn't institutionalized. It was called bootstrapping.
Yeah.
And and then Drexel Burnham and Mike Milken, all those guys came in, and it obviously took off. But when I was reading about, you'd get guys like Steve Wynn, who couldn't get money from anybody to basically build his empire, and they financed him and they backed him, and he created this amazing empire. And then he molested a bunch of massage therapists later on, but for a while he had a pretty good thing going. What was it? RGR Nabisco. They took that over and they did a lot of things to it. And there was this sort of energy to it, right? You're infusing these companies with capital and with new management and energy. And the guys who were doing it were also running the businesses. And you had these, these incredibly sort of intriguing auctions going on, where they were like these massive, massive companies were being shaken up. Chrysler, right? With Cerberus, great example. Ended in tears, but was another, another way that they were able to take. I mean, who would LBO an auto company, right? Now today, it's like unthinkable, but they did it.
Yeah.
So there was this really enterprising spirit that I was gravitating toward. And I was just in there doing deal after deal after deal. I was one of 3 analysts at the entire bank in financial sponsors. Now, when I left, there were about 7. So we were just getting shelled constantly.
Yeah. So tell me about
it was great.
Tell me what the progression. So like you're there for the first year, you're immediately like, you're obviously an experienced analyst. So they're immediately throwing you to, in the deep end.
Yeah, they threw me to the wolves day one.
Yeah. And so you're working
no training,
80, 100-hour weeks right off the bat.
Yeah. I did that. I did 80. I probably averaged 80 hours a week for the first 2 years. My 3rd year as an analyst there, I throttled it back to like 75 or 70 or something.
Yeah.
And it was, it was cool, but
then you got a big promotion eventually, right? So you're doing.
I did. Yeah. So I stayed there. I mean, I was there for 7 years and I loved it. I loved the group. I loved the guys that I was working with. Loved the deals. I loved the industry experience that I was learning. I was surrounded by brilliant people all day long, and I learned so much. I mean, I think of banking now, for people who want to do it, I think of it as business school you get paid for.
Yeah.
Especially if you are in a, really any group, product or industry, you're going to learn more. I think you will learn about more industries as a product banker. But you get so much exposure that you would never get really in any other job, maybe consulting. But it's just such a great way to learn about all these different industries. And I was fascinated by it. I was constantly learning and being challenged. And
you're doing really well. You're doing really well, and you're getting probably paid really well. So bonus, you're probably making like 85 base and 80 bonus or something like that, or 50.
The base jumped up. The base wasn't that good when it started. It jumped up because I started there.
Oh, you started in 14. Sorry, so 70,
14,
70 something, 75 or.
Yeah, it didn't jump up into the 90s until my 2nd year, but yeah, I mean that was great compared to what I was making before. And I never spent a lot of money, so it didn't really matter that much to me.
Yeah.
But it was nice to have for sure.
Listeners always get mad if I don't ask about what you made.
Yeah, of course.
Like, what did he do? Like, how did he do? I'm like,
I wanted to make money just like anybody else who gets.
Yeah. Well, I think people hear 80 hours a week and they're like, oh yeah, that's hard, but I could do it. But then when they actually live it, it's totally different.
Yeah, exactly.
Like, oh yeah, you can do it. But then like you realize Friday night, like you're called back in the office and you're there all night.
Yeah.
And kind of something planned like to go out. And
I did 100 hours a week for 50. so 80 was.
You did 100 hours a week for what? For what?
For 50 grand.
Yeah. Oh, you were getting work.
That was my starting analyst salary. It was 50.
And you were getting work more at the previous bank.
Yeah, and I worked hard. So I always said my saying was I've done worse jobs for less money. It was true.
So.
So 80. I was my analyst. We got bumped up. I think my 2nd or 3rd year to like 90. Street now is what at first year 90, like 100, 95?
No, it's like 100 to 120.
Yeah,
for first year. So 120.
Yeah. Yeah. I mean, because they have to. I mean, with the amount that people are working, it's crazy, and their attention, obviously. So anyway, I love the deals. I love the group. I love the guys I was working with. I still do. I would have probably stayed in banking realistically if I could do it remotely. I didn't really leave banking. I left New York because it was just too much.
You just wanted to get out, just because like the lockdowns and everything that was going on.
Yeah, I mean, people were riding in the streets, and I had to stay in my apartment 24 hours a day. It just didn't make any sense.
Yeah.
And all the stuff that is great about New York wasn't there. It was all closed.
When you had to come back, what date did you come back to New York? Where you like made the
came back in February of 21.
And so it hadn't quite opened up back yet, right?
Yeah, it was still not fully open.
Yeah.
And I had basically my lease. I still had a lease in New York, but my family had a place in St. Petersburg. So I was staying down there. I wasn't thankfully paying rent down there, so I could hang out in my New York apartment.
Yeah.
and my lease expired in June. So I was the whole time trying to renegotiate my lease because rent had fallen by like crazy amounts.
Yeah.
At that time in New York. And you could rent, I was paying probably 40% more than what other use comps were renting for in my building, not even across the street. So I was like negotiating with my landlord furiously for like 5 months. They wouldn't renegotiate. Worked out well for them because I'm sure they probably got the same rent when I left. But anyway, I'm like, I'm paying all this rent. Doesn't make any sense.
What was your rent? Like $3,000 a month?
No, I figured out. It was smart because I got a rent controlled apartment when I wasn't making that much money.
Oh, wow.
So I had a rent controlled apartment for like 6 years. And so I was paying about $2,500.
And where was that?
I think in Lincoln Square.
Oh, okay.
In
nice.
studio, but like no amenities, not a great building. I was paying for the location.
Whatever. I lived right near there. I lived at 55th and 8th.
Oh yeah. Yeah.
I walk by there all the time. Four floor walk up or whatever.
Oh really?
They called it a one bedder, but it was like, closet bedroom and that was good.
Mine was good because I had an elevator. So I was like living in the lap of luxury. But yeah, I worked in Hell's Kitchen. So I probably walked by your apartment like 1,000 times.
Yeah.
But it was great because I was 2 subway stops, from work. And when you're working that much, that really helps.
Yeah.
So anyway, but no, I liked the deals. I like the guys I work with. I was working a lot.
When did you get the promo to VP? Like what happened after? So a couple of years.
That was in 2020 in May.
And so when were you an associate?
I was an associate for 2 years from in 18 and 19.
Oh, 18 and 19. Okay, got it.
Yeah. So I was an analyst from 14 to 17, and then
that's pretty fast to get promoted from associate to VP, right? 2 years is like pretty fast, right?
I don't even know anymore.
I thought it was like 3 to 5 years or something.
I think it depends. The banks are different now. Now it's probably that. Now that would be probably slow because people are doing analyst for 2 years and associate for 2 years.
Yeah.
Because their retention is.
They just have to like they have to give the VP title fast. Yeah.
Because people just won't stick around.
Yeah.
And
I feel like it's moved. The pendulum's moved too far away from like the retention. I almost like argue like people are.
For some people, it has. The thing is, it really shouldn't be about time. It should be about capability, just like anything else. I mean, there's a person being in a certain job for a certain amount of time doesn't necessarily make them good. It increases the odds, but they never become 100. I don't think it's swung too much. I think it should be an option for 2 years. I think you should basically be able to fast track someone after 2 years to VP, like 2 years analyst. You get the option to go to associate. 2 years associate, you get the option to go to VP.
So by the time you're a VP, you're clearing really good money. Are you like you're not spending?
Yeah, it's pretty good.
You're not spending a lot, so are you saving a lot and investing?
Yeah.
Let's talk about do you mind talking about like you don't have to say what you have in your net worth or anything, but like can you talk about like you're obviously rent control apartment, you're not spending a ton, you're working a ton. So how are you, throughout these years, how are you thinking about deploying some of that capital to get a return on it?
I had no idea. I mean, I was in the stock market in and out. I was always skeptical of the Fed and tightening. And because I had learned a lot about, I studied a lot of economics outside of, I guess what you would call like conventional economics. Like I looked at.
So you were really nervous about like the Fed suddenly tightening
I just knew that they could never do it. I knew it never worked.
So why wouldn't you put your money in the market then?
Anytime they tightened, I knew that there was going to be a recession because there always has been, right? Throughout history, they've never gotten it right because they can't get it right because they can't control it that closely. All they can do is manipulate interest rates and the discount rate and stuff like that. So I had this sort of like the conventional whatever education, and then I had this sort of unconventional or unorthodox education of looking at like what different people from like the Hegel school of economics would say, right, or the Austrian school. And I looked at it from a lot of different viewpoints, but I knew that the Fed had never really gotten it right ever in its history. And I knew this time wouldn't be different, no matter how much anyone said, because they always said that. So I basically speculated in the market in and out. But it was the only thing I had available to me because I wasn't like accredited. I couldn't really invest in any alternative vehicles.
Yeah.
But so I would go in and out when I thought things were going to go well. When I thought,
how did that work out? I mean, it was pretty crazy.
Worked out great. I mean, look, I was investing in a secular bull market, so the odds were in my favor. But I never really caught any downdrafts in the market because I always got out beforehand. So like I got out of the stock market in like maybe summer 2020, something like that. I'm not going to give you my whole portfolio history because it's boring, but
tell me about like real estate too. Like when did you start doing that? And tell me a little bit about like how
I didn't start doing that until summer 2020. So I got out of stocks. I thought COVID was going to be done sooner than it was. So I was basically in mostly cash. No, I was in cash prior to COVID. When COVID hit, I bought the dip. I bought it a little early, so my returns weren't as good.
Mm-hmm.
And then I sold when I got to a threshold that I thought made sense. Like 20-ish. No. Mid teens returns basically was where I was like comfortable, and I was like, all right, I made my money. I got out. But I didn't like where things were going. I didn't like all of the easing that was going on. I didn't like the stimulus that was going on. I figured there was a good chance there was inflation, so I didn't like bonds. And I had actually, interestingly enough, done some like just real estate classes online during the summer of 2020, because it was interesting to me.
What I didn't doing classes online while working as a VP in banking.
Yeah,
you're insane.
I just never. I don't know. I'm restless.
Did you don't have family?
I don't have a family, no. Okay. So I can do that.
Yeah.
Because I would have been divorced.
Yeah.
I would have been divorced before that. Working in the hours.
Sorry, my 70-hour work week's done, but it's gonna take a couple hours.
Yeah. Sorry, honey. Have fun with the kids while I go learn about real estate investing. So anyway, yeah. So I learned about, and what I thought was really interesting was you could get private equity returns without private equity risk. You weren't going to get the top tier private equity returns. You weren't going to get 80% IRRs.
Yeah.
Like, Thoma Bravo is making, or some of these like software funds, but you will get mid-teens to low 20s, maybe higher returns without the downside. And the reason I knew that real estate was where it was at was because no one ever told me about it. And the plebes are never, ever, ever told. But this is what the billionaires invest.
Calling yourself the plebe? A plebe?
I was a plebe, yeah, absolutely. And I was a finance major. I had a 4.0 in my major. I knew portfolio theory.
But you feel like that even in 2006. I mean, if you invested in real estate in 2006, you probably, there's definitely pockets that people got burned in real estate. You're saying
not commercial multifamily though.
Yeah.
I mean, yeah, you probably would have if you over levered it.
Commercial, yeah, right? Like, yeah, if you over levered, right? Okay.
But I'm talking about multifamily. So I'm not like office, but like huge, like 300 unit apartment buildings.
You don't think that could go through a bubble, or that's in a bubble or anything like that?
No, you can because it never. First of all, it's a liquid, so you don't have the downdraft. People can't get out in a day or a week. Second, it never really experiences that much depreciation. It usually will drop, maybe 10. I mean, I think the most is like 15%, but that's like 1980 savings and loan crisis, like 2008 crisis. But people always have to have a place to live. And in a recession, it's countercyclical because people will often trade down to apartments when they have to, if they can't pay their mortgage, if they're underwater, if they get kicked out, they get evicted, they get foreclosed, whatever. So you have a lot of downside protection. And you can
how are you getting that exposure? Are you buying up with partners like
private equity syndicates?
Okay. So tell me,
because I'm an accredited investor now, so I can now do private equity. But when I was, plebe, I couldn't. I didn't know about it either.
But how did you get in touch with these people? Just friends, bankers, for other bankers?
No, how did I do it? I was reading was reading a book by a guy who does real estate. He's the guy I ended up investing with. His name's Grant Cardone, and he does like basically these like huge. He's almost like crowdfunding.
Yeah.
But it's for accredited investors, so it's private equity, but it didn't have the minimums that
Large fund.
major institutional private equity fund, real estate private equity funds would have, because I didn't have that much money.
Yeah.
I had enough to be accredited, but I didn't have enough to like.
You can't write a check for $1 million.
Work for Blackstone, right? Or like a big brand real estate PE fund.
Mm-hmm.
So I just invested with him, and I over time I invested in like 4 funds, and I put almost every dollar that I had, because it was just the safest investment. It had better than market returns.
Yeah.
Because you can also lever it. And I knew, so because I'd been doing LBOs for so long, I knew how to lever stuff. And so I knew the profiles of the buildings that he was buying. And I'd also done real estate IB, so I knew how to calculate NOIs. And so I could read the models that they were underwriting. And, when you're coming off of LBOs, and we were levering stuff like 10 times EBITDA.
Yeah.
Because we're doing like tech and software companies.
Crazy. Yeah.
So like the leverage profile was conservative compared to what I was used to seeing. So I was like, this is perfect. And obviously you can go higher on real estate, depending on the quality of the asset, but I don't invest in those, because then you're just increasing your risk. But regardless, whatever. So that's where I sit today, because I don't like the setup for the market. It's funny. I had a very bearish kind of tilt, because I didn't like what the Fed was doing. And I was reading guys like Jeff Gundlach, who's a genius and who I recommend to everyone, because what he pointed out was like, if you looked at basically how much of government spending was going into GDP, that basically all the GDP growth was coming from government spending and effectively debt. So all the the great performance of the last 10 years or whatever was largely attributed to GDP growth that was funded by debt, right? So we're kind of sitting on a house of cards, which arguably it's even worse today, I would say. So I never liked the setup for either the stock market or the bond market. I couldn't really do private equity because I couldn't really afford the minimum. So this was like the perfect vehicle, and it's worked out really well so far.
I appreciate that. Thanks for explaining. Tell me now, like, so the big decision happened. You said, I'm not going to be in New York anymore. I'm going back down to Florida. I'm going to do this acting and comedian thing. So like, tell me how that's going, and, looking back, up at it. I mean, you just kind of did it. So, but tell me, like, movies booked, auditions, what's your day like now? Very different probably from 6 months ago.
It's so funny. It's a completely different thing. I mean, I was auditioning. I was doing stand-up I've been doing it for 3 years, off and on. When I was in New York, that was the great thing about being in New York, was I had access to all these clubs. I would just leave work and I would go down. I was like the husband in Mrs. Maisel, except I didn't fake the act.
How many shows would you do in a given month?
I would do like open mics a couple times a week. I would usually do like a show every month or two.
Cool.
But I did nothing but open mics for like probably 6 months. I was writing for 6 months before that.
Mm-hmm.
And then I had enough stuff that I felt like I could do it. And then I started doing it. And then I realized that I didn't have enough stuff because I only use 25% of what I write.
Yeah.
And then I did my first open mic, and it was like almost none of my stuff worked. I had this whole grand scheme, right?
Yeah,
that I had rehearsed and practiced, and almost none of it worked. And I had the moment of like complete and utter terror.
Of course.
Standing on stage, there's no one else there. There's not a sound in the room. And you can hear people like move a napkin.
Yeah.
That's how bad you're bombing. And but I got enough out of it so I was like, all right, I think I can figure this out. And I just kept going and I kept doing it and I kept
Yeah, I mean, the good part about that is you're testing material, right? You're testing delivery, you're testing everything.
yeah, and you really like I didn't know it at the time, but like that's your hardest audience, mostly open mics. It's mostly other comics and they're not there to listen to you. They're there to do their material and
Yeah.
get out.
Yeah.
So there for 6 months, it was really hard. And then I started doing shows where like there were people paying to go. And that was a totally different experience. And I was like, oh wow, this is like fun. This is like, the other stuff was fun, but it was like grueling. It was like being an analyst, except worse. And I just kept doing that. And then I ran into this talent manager and I was like, I've always been interested in acting. And so she started sending me out for stuff and I had to, again, learn a whole new industry with that. And at that point, it was like the pandemic struck. So all the auditions were now remote. So I was doing stuff on my iPhone, taping my own auditions. And they were like horrible at first. And then I would learn that. So I had to learn how to, edit those things and use all these different web platforms and whatever. So it was like this year-long, basically, learning curve until this last summer. And then I auditioned for this movie that I ended up getting, and that was supposed to film in the fall. So it almost worked out perfectly where I could basically, I was going to like ride off in the sunset from banking and then go like straight to Hollywood.
Yeah.
And then that got delayed, and now it looks like it's going to film hopefully this summer, but I think it's going to be in like Sri Lanka or something like that.
Yeah.
For all these different reasons. And then I just booked a Western.
When you book a movie or book a Western, like, and you're a new actor, I assume the economics are not great, but like, do you mind sharing like what it looks like? Or you have a talent manager, you're part of like.
It depends if you're in the union or not.
Are you in the union?
Standard. It's almost like a street level, right? Salary.
Yeah.
There's like a standard that you have to get paid.
So are you you're part of the union? So
No, I'm not. Not yet. But you have to build like a certain amount of credits to get in the union.
Right.
And then go from there. It's it's funny because all these things couldn't be more different, but it's also similar because it's kind of like banking, right? Like you build your credibility somehow, right? You like do your internship and then you do your, you have a finance major and then then you do some modeling boot camps. Like
it's all the same. It's probably the networking matters and who matters.
Networking is huge.
Yeah.
It's totally critical. I mean, that's the thing. It's like, the skills you build, the skills that I built hustling to get my, Wall Street gig is the same stuff I'm using now. I'm meeting people, I'm going to conferences, talking to people, calling people, doing Zoom calls. It's like I'm an analyst all over. It's like I'm like a college, junior all over again, setting up coffee meetings and talking to
where
people.
Where are you living right now?
I'm still in Florida.
In Florida, cool.
Like 30 minutes from St. Pete, in Clearwater, which is like right on the beach.
Yeah, I've been there.
Which is amazing because the cost of living is like.
You could last on your bonus for a long time there.
You could. Yeah, you really could. I mean, I basically retired. I told everyone I retired from banking, which was pretty much true. I mean, it's a retirement community essentially, so it's not far off. But
believe it or not, I partied in Clearwater with buddies back in the. I have a friend who's from Tampa, and another friend who had a house in Clearwater, I think. And so I've been out that way. It's fun.
Yeah, it's nice. I mean, it's like I like pinch myself sometimes waking up there. It's insane.
Yeah.
And then Tampa has all this like film and TV and stand up and stuff. So it's like ended up, it turned out to be even better than I anticipated. But I mean, God, I'm paying 20% less than I was paying for my studio apartment, and I have a 1-bedroom, like every amenity you can imagine. It's crazy.
Yeah.
So there's, it's just funny what I've found over this whole sort of journey. And I think it's actually really inspiring for your audience. And I'm glad to be doing this with you because I learned so much from WSO and all the amazing people and the conferences that that you guys did. I mean, I think we met 10 years ago.
Long time
at WSO Con at the Penn Hotel.
That was a long time ago, man. Yeah.
Man, I know.
Crazy. I have a lot more grades to show for it.
but it was, I mean, it was the same. It's the same pattern over and over again. You meet people, you have the idea, you have the intention, you have what you want to do.
Mm-hmm.
And if you're sold, and if you're committed, you can do it. And, whether it's banking, whether it's Hollywood, whether it's, real estate investing, I mean, whatever it is, if you really, I know people who didn't have my background at all and made it into banking or like big real estate investors now, or doing, whatever thing they wanted to do, entrepreneurs that have exited companies and done really well, turned down jobs at McKinsey to do their own, thing and, made it happen. Look at you, look at what you've created here. Like you really, some of the best advice that I got from Wall Street Oasis was there are a lot of ways to make money, and that's true.
Mm-hmm.
There really are. Wall Street's a great sort of entryway to that. It's a great, obviously, career as well. But the skills that you build there are incredibly valuable, and the way the people that you meet there are valuable. But in a lot of ways, I learned as much trying to get the job as I learned on the job. And that's something I think that maybe is not touted as highly.
For sure.
For people in this industry, is that, the hustle that you do. And look, for guys that, come from target schools and whatever, they had to hustle to get into that school. You know what I mean? So I don't think it really changes.
Oh, it's still tough to get in.
Wherever you are. Yeah. I mean, getting into, an Ivy League school or a target school is, an enormous hustle on its own. It takes years, right? Building that resume and the extracurriculars and, all of the, your scores and everything. So it's like any of this stuff requires preparation, thought, and connections that you build. It's not, who your parents know necessarily. It's ways that you find to meet people. I got in through the instructor at, my boot camp class, right? I'd never heard of anybody doing that. I wasn't expecting to do that, but that's how it happened. So,
what do you think about like your just like entire demeanor and like your outlook on life now, in terms of like, where do you see yourself? Do you see yourself like continuing to grind until you're successful as an actor and a comedian? Like you'll just keep crafting it? Like, are you dedicated to do it for the next 5 years if you need to before you hit anything? Or like,
I'll do it. What's funny is like, I always wanted to be an actor. I didn't think you could make money doing it. And I was like, I need money to survive or whatever. So that's what led me on this sort of path. But, I've always done things that have really excited me. And I've never really done anything that hasn't excited me for that long. I had done things that haven't excited me, but I usually left after a while to go do something else. And I think what I've seen in really successful people, and I've had, speeches with Steve Schwartzman and tons of incredibly successful, business people, entrepreneurs, Tony James. I mean, all these guys, I've read all these books, and what I found in all of them, whether it's a musician, whether it's a, Wall Street executive, whether it's, an entrepreneur, a billionaire, an artist, an actor, every single one of them just has the passion before they have anything else. They don't even know how they're going to do it. Most of them have no idea how they're going to do it.
Yeah.
They just know what they want to do and they figure it out.
Mm-hmm.
So for a long time, I thought you had to have a plan, and it does help to have a plan. But what you have to do, and what I've found in everything that I've done that's worked, is if you just start doing it and you have the intention to do it, most of the time, if you really want to do it, you will.
Yeah. And
it can take years. I mean, if you want to count school, it took me 6 years to get into banking.
Yeah.
It took me at least 3.
Yeah.
If you don't want to count school, right? To do acting, I started 4 years ago, almost. So never underestimate how much time it's going to take, but if it's the right thing, you're not going to care.
Yeah.
And if it's the wrong thing, you'll figure out eventually, because you just won't want to do it.
Yeah.
Guys like Gary Vee will tell you that, all these really, really talented, successful entrepreneurs, they'll kind of say the same thing. It's like, figure out what you want to do and then just start doing it. Don't wait for it to be perfect because it's never going to be perfect.
Yeah.
If I had waited, if I had done a ton of research on a stand-up comedy, I never would have done it.
Yeah.
Because it would have sucked so much. What if I learned how bad bombing felt? I never would have done it.
Yeah.
You know, if I knew how many auditions of mine got rejected, I never would have gotten into acting. You know what I mean? If I knew how many times I would have gotten rejected to try to get into Wall Street, I never would have done it. You know what I mean?
Yeah.
If you focus on that, you'll never do that. What you got to focus on is, what is my goal? What do I want to do? What do I like doing? You know, what really motivates me? Because it's going to take you. I used to mentor kids, you know, on Wall Street, and I used to have people hit me up on LinkedIn all the time, and I would always talk to them because people help me. And what I always say was, just make sure this is what you really want to do, because a lot of people get the idea that like it's the road to riches, and it can be.
Yeah.
But if it's not what you want to do, you won't get there, because it just takes so much to make it to that point. And not even just to get in there, but to succeed, because you're competing against incredibly smart, talented, driven people.
Yeah.
So, you know,
it's not enough just to get in, and, you know, you have to then you have to grind, you know?
Yeah, exactly. And that's the biggest thing. And luckily it applies to a lot of other things too, but just make sure it's what you really want before you go into it. Don't let yourself get talked into it because your friends are doing it, or your family wants you to do it, or because, you know, it seems cool, or most of, you know, your finance buddies are doing it or whatever. Just make sure it's what you want to. I mean, you can be a finance major and go off and do something else. You know, if you really want, you know, whatever. Make sure what you're doing is what you really want to do, because it's hard to be successful if it's not.
Yeah, and I think one of the other thing I'd say is, the sooner you can figure that out, what you like, the easier your life will be, because you'll be enjoying it. The hard part is actually, but I don't blame kids, even coming out of college, that don't know that yet. I think it's really hard. Like, if you haven't worked or done, I mean, internship's one thing, but like, if you haven't really worked full time and tasted that, like those all-nighters are like, okay, wait, is it, you know, the existential crisis comes like in that third all-nighter in a row, you know, that 40th hour that you haven't gone home. You start thinking,
you'd rather have a crisis in your, you know, in your like late teens and 20s than you would in your 30s and 40s.
Yeah, exactly.
For sure. But yeah, you're right. I mean, I personally think the idea of a gap year is really good for people.
Yeah, that'd be awesome.
And I would.
Yeah, I think you were probably more mature too by the time you
totally. If I had stayed in college, I would have, you know, all the way through like undergrad, I would have wasted my time, and I would have wasted a lot of money.
Yeah.
You know, so not everyone has to do that or has to like whatever, but I would say if you don't have the experience to relate your education to, it's going to be less valuable for you. And, you know, I think the educational model is starting to realize that. I think people are starting to come around to this idea that like just funneling people into a 4-year college because they graduated high school is not always the right decision for a lot of people. And a lot of people are walking away from school with a lot of debt and not that many more answers.
Yeah.
You know, so just figure out what you want to do and then do that, because that's what everyone who's successful does in any field, whether it's profit, nonprofit, you know, arts, industry, government, you know, they've all done that. You know, that's probably what you did too, I would imagine.
Yeah, for sure. We'll end it there, because I think I've already kept taking you away for over an hour. But Dix, I really appreciate you joining. I tell people where they can find you, or where.
Yeah, absolutely. Yeah,
and I'll link it in the show notes too. I'll link.
Thanks, man. Yeah, I appreciate that. You can follow me at Dick Jokes Comedy on Instagram, YouTube, and Twitter. I have all my stand-up clips are on YouTube. And then I do all my like sketch and comedy and little acting clips on YouTube and Instagram. So that's the best place. And a lot of my jokes end up on Twitter too. So that's the best place. Find me. I love connecting with people and you know, staying a part of the community, because it's a great world, and you know, the world that you've built at WSO is fantastic, and you've got an incredible wealth of talent there. So, if people want to hit me up, I'm happy to help them. If they're trying to get into Wall Street, if they're trying to get into Hollywood, whatever.
Cool.
Let me know. I'm available.
Love it. Love it. Awesome. Thanks so much, Dick.
Great, man.
All right.
Ciao. Happy holidays. Happy New Year.
Holidays. And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.